the US dollar will lose 75% of its purchasing power, real purchasing power, over 10 years. And I believe that gold will maintain its nominal purchasing power. Given that I think that the price of gold goes higher every 10 years, goes higher over 10 years, I welcome a lower gold price. I particularly welcome the weakness in the gold equities, which I thought were not unreasonably priced before this recent decline. So while I suspect that the near-term impact of this decline is overdone, for selfish reasons, I would like to see it continue. I would like to increase my personal holdings of physical gold in my savings accounts, and I would like to increase my holdings of gold equities in my investment accounts. This will be good for gold. By the way, in the United States, we characteristically underestimate the cost of war. The Iraq adventure was supposed to cost something like $500 billion, and the final tab came in closer to 5 or 6 trillion. So the estimates that you're seeing about the aggregate cost of the war, even the direct aggregate cost of the war, are almost certainly understated. I think everybody needs to understand that. I think that there's enough flex, meanwhile, in the U.S. economy that sadly this can go on without breaking things. But bending things comes at a price. The amount of borrowing that the United States has had to do on a very short term has raised even short-term interest rates, despite the preference of the Trump administration to see lower interest rates. Ultimately, I suspect there will be a political consensus around lower interest rates. So irrespective of the market, my suspicion is that at the first hint of an economic slowdown, and I think we're seeing fairly broad hints of an economic slowdown already, that there will be an artificial increase in liquidity, which is to say some form of quantitative easing, and the attempt to manipulate the short-term interest rate down. This does not help the refinancing of the U.S. Treasury. The U.S. Treasury has had a consistent policy of buying in the illiquid long-term debt and replacing it with short-term debt, which means that an increasing amount of the $39 trillion in government debt that the U.S. government needs to finance needs to be refinanced on a short-term basis. The need for fresh borrowing around social programs and around the conflict in the Gulf, combined with the rescheduling that the Treasury has to do in the next 10 years, gives us some risk of their ultimate fear, which is to say a Treasury auction where nobody shows up and they have to buy the whole issuance. Should that happen, I guess all bets are off.
As government spending continues to rise, so does the dependence on debt. The United States is now facing the enormous challenge of managing and refinancing a national balance sheet that exceeds $30 trillion. A growing portion of this debt is being shifted toward short-term maturities. While this may offer temporary flexibility, it also increases exposure to sudden interest rate changes, making the system more fragile. Institutions like the U.S. Treasury are forced to constantly roll over this debt, creating ongoing vulnerability in the financial system. To manage these pressures, policymakers may turn to tools like liquidity injections or renewed quantitative easing. While these measures can provide short-term market stability, they often come at a cost. Such interventions can distort price discovery, weaken market signals, and make long-term fiscal sustainability more difficult, especially if underlying inflation pressures continue to build beneath the surface. Are you curious about investing in gold and silver but feel held back by fear or confusion? This ebook is designed especially for new investors who want clarity, not complexity. It breaks down gold and silver trading strategies in a simple, practical way. No jargon, no hype. Why wait? Hurry up. Please visit this link to get your copy today and use code DUNDEEPLE for a huge discount. More than 1,000 people took the first step with this ebook, and today they're living proof that smart investing changes lives. Start investing fearlessly, wisely, and with a clear strategy.
Unfortunately, I say unfortunately because our bias at the conference has always been that the government invariably makes severe mistakes. Uh, Last year, you'll recall we had David Stockman, who had been the director of the Office of Management and Budget under Reagan, talking about why Reaganomics failed politically and why the Department of Government Efficiency would fail so dismally. We were right, unfortunately. We will have a variety of speakers this year that talk about how, as an example, the current level of government expenditure relative to the size of GDP is unsustainable, and why the consumer price index is not a reliable index of the rate of deterioration of the US dollar, and why you need to diversify your savings and investments to protect yourself literally from Congress and the presidency. I say unfortunately because the political prognosis that we offer up, the big picture, the macro prognosis that we offer up is fairly grim. I wish, frankly, over the last 6 years we had been right less often, more and wrong more often. That has not been the case. At the conference, we believe forewarned is forearmed. And what we try to do is present a range of big picture thinkers, the Jim Rickards of the world, the Nomi Princes of the world, the David Stockmans of the world, who explain to you the way the world really is, not the way that CNBC would have you believe, not the way that Fox would have you believe, not the way that the Senate would have you believe, but the way the world really is. If you understand something about the way the world really is, and you come to understand what it is that you can do to protect yourself and your family via your own portfolio, you will get through this next 10 years better than would otherwise be the case. And that's really our goal at the conference. You know, we've been advocates, Paul, as you know, in this conference for almost 30 years about the reasons why people should save in gold and maintain liquidity in U.S. dollars. It's been a constant theme of ours since the turn of the century.
Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.